You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble. His website is dollarcollapse.com. Welcome to the show, John.
Hey, Jim. Good to talk to you again.
The U.S. economy. Every 3 months we hear a grand statement about how well things are going. It seems to me for the last 6 years I've heard about how well things are improving, how things are going. Is the U.S. economy improving every day?
Well, you know, it turns out that the whole improvement side of the story is due to one data series, which is employment in the U.S. Every month or so, the government comes out and says, yeah, we added 200,000 new jobs, and so the labor market is booming, and people focus on that one thing and ignore everything else. And when what is actually happening is, first, that's kind of a false number. You know, that employment in the U.S., the way the government keeps these stats is they lump every job into the same pot, whether it's a 20-hour-a-week job at McDonald's or a corporate lawyer or engineer job paying $250,000 a year. You know, those are counted as the same thing in the government stats. And the fact is that most of the new jobs being created are part-time, low-wage jobs. So they're really not employment as the average adult would think of it. So, but meanwhile, all the other statistics are extremely disappointing and getting worse. You know, manufacturing growth is slowing in the U.S. to the point where, you know, extend the trend out just 2 more months and you get zero, you get a contraction. And housing starts are way down, so that data series is actually contracting now, month by month. And home builder confidence, which is, related to housing starts, and it's way down, as low as it's been in the last year. Meanwhile, oil prices are down, so the oil patch, which used to be the source of most of the good jobs in the U.S. that were being added, now is reversing out. It's laying people off. So we're going to see hundreds of thousands of lost high-paying jobs in the oil patch in the year ahead, and where there used to be tens of thousands per month of gains of good jobs. And now estimates for GDP for the rest of the year are starting to be scaled way back, and there are some analysts actually predicting a recession starting basically now. So the U.S. is not heading in the right direction. It's actually edging down to zero and into contraction. And meanwhile, we got the Fed meeting today deciding whether they think the economy is booming to the point where they need to raise interest rates. So this is a really interesting juxtaposition of two different mindsets. You know, the real numbers are very negative, and the spin that the government is putting on these numbers is very positive. And so the Fed has to choose one side or the other, and later today they're going to tell us what they've decided. And so, markets are always extremely volatile on days when the Fed meets. Usually they're volatile to the upside because the Fed tells the markets what they think the markets want to hear. So we'll see if they do that again today. But, it's not really clear what the markets want, because for the Fed to say, yeah, the economy's great, so we're going to raise interest rates, is arguably a really bad thing for stocks and bonds. But for the Fed to say, the economy's really weak, so we're not going to raise interest rates, is also arguably very scary for the financial markets. So who knows? We'll find out. And it's going to be probably very volatile one direction or the other, as it usually is. And I have no idea what they're going to say. And frankly, don't really care, because in the end it all washes out. Fundamentals win out in the end, and government talking heads are not the people determining what happens in the long run. They can cause squiggles, and they can engineer a short-term bull market or bear market if they want to. But in the long run, fundamentals, which is corporate profits and good jobs and technological progress, things like that, those are the things that determine what the financial markets are going to do. And the Fed has really no power over any of that.
Well, their announcements are just like Orwell's book, 1984, where they keep announcing the economy's getting better. You're getting more chocolate ration every week, where, it's the complete opposite, but they keep declaring it and people are expected to believe it.
Well, yeah, the perception in the financial markets now is very 1984-ish, because good is bad and bad is good a lot of the time. A weak economy tends to be greeted by the financial markets with with enthusiasm because it means the government is going to pump even more money into the financial sector, and so we really are at the point where words and events mean the opposite of what they actually mean. We interpret them to mean something that is different from what the words say. And so, which means who knows? It's very hard to predict anything in a world where words can mean whatever the financial markets would like them to mean. And government spin is completely divorced from reality. It's whatever the government officials believe the financial markets would like to hear, and that's the spin they put on stuff. So, it's kind of Twilight Zone-ish. And again, it won't last. Fundamentals win out in the end, but right now we're in a manipulated market where the manipulators are getting away with it. But not for long. One actually, to segue over to Europe right now, one sign that governments are having trouble fooling people is that the European Central Bank just opened a new headquarters building in Frankfurt. And this was yesterday, Frankfurt, Germany. And instead of it being a big celebration of this organization that is leading the economy in the right direction, 10,000 protesters showed up to demand an end to austerity in Europe. The protests turned violent. The police came out in force with helicopters and riot gear and troop carriers and stuff like that, and they put up roadblocks everywhere. And in the ensuing violence, 90 cops were hurt. And I don't have any stats on how many people were arrested or injured among the protesters, but it was probably a fair number. So this was a serious piece of civil unrest in the heart of the financial district in Germany. A big police presence with violent protests is something you don't see very often in Germany. And, I'm not at all sure that we've seen it in the last 20 or 30 years. It's just not the kind of thing that culture normally sees. So this is a fairly big deal because it means a fairly large number of people don't buy into the mainstream take on economics, which is that the central bank should just flood the world with money, and meanwhile these peripheral European states should just bite the bullet and accept austerity, scale back their government spending to bring their budgets into balance and impoverish their people in order to allow Germany to have the kind of monetary policy that they would like to see going forward and that they're comfortable with. So now you're seeing a real culture clash in Europe that seems to have momentum now on the side of the protesters. So it'll be very interesting to see where this goes, because you've got the Greece drama going on right this minute, where the Greeks really can't function under the kinds of austerity that the Troika, the IMF, the European Central Bank, and who's the other one in the Troika? I don't know. There are three big organizations in Europe which are together imposing the kinds of austerity on Greece and the other peripheral countries in Europe that are really making them suffer and are unemploying 50% of young people in Greece, and almost that in Spain and Italy and several other countries. And so Greece has to be resolved one way or the other in a very short time, and it's not clear that they can function under the system that's being imposed on them. So the odds of them leaving the Eurozone are growing now. And if that happens, then you're going to see turmoil that makes the Frankfurt thing look like the good old days,
Well, the latest from the BBC, 350 people arrested, dozens of people injured. As you said, 100 police officers are close to that. Police cars were set on fire.
This is Germans. These are Germans doing this kind of stuff.
Well, when they protest, though, it's like they're fun. They take it very seriously.
Yeah. But you just don't see Germans setting police cars on fire very often. It's very rare in that culture. Whereas, in some other cultures, it's just Saturday night.
Yeah, well, laws in Germany that people should be aware of. When you move, you have to let the police know what your new address is. In Germany, the most popular case you'll see in court is it's against the law to swear at your neighbor. It's an automatic $200 fine.
Yeah.
And so anytime somebody has a dispute, they don't have disputes because they have all these rules against them.
Yeah. And there's something to be said for having respect for the law. If you want to change the law, you do it through the ballot box. And then but once a law is enacted, you obey it. That leads to an orderly society where people are respectful to each other, and in a sense is a good thing. That's
unless you feel a
Germany,
disconnect.
those kinds of
yeah,
cultures.
Unless you feel a disconnect. Where
unless the laws become so bizarre and so oppressive, and you can't change it through the ballot box, then you've repressed your anger for such a long time that you tend to blow up, and that could be where Germany is going, because they have tended for a really long time to put up with some really frustrating laws for them. See, they're suffering under the other side of the Eurozone equation, which is they're expected to pay to bail out all these peripheral countries that they think are not carrying their weight and are not working hard enough and not paying attention to day-to-day life the way that the Germans do. And so Germans now feel really put upon because they see all this debt from the Eurozone periphery coming back to their national balance sheet. Because basically to bail out these countries, Germany has had to guarantee the debt of Italy and Spain and Ireland and certainly Portugal and Greece. And that means that German taxpayers are now on the hook for all this stuff. And so should Greece blow up, well, the ECB owns a whole bunch of Greek debt. And who's in charge of the ECB? Germany. And who has to pay Germany's bills? German taxpayers. So they're not liking where this is going either. And they've been putting up with it fairly stoically for a long time, but now it looks like they're ready to get these laws changed however they have to do it. And that's an interesting twist. And it's a scary one, Historically, Germany has been obviously a really volatile country. They tend to, historically, they veered off in some bizarre directions. And one of the European nightmares has always been an alliance between Germany and the other fairly dark, scary, bizarre country in Europe, which is Russia. And that's starting to happen. There was just a story that came out today that U.S. foreign policy is basically geared to preventing an alliance between those two countries. And yet, they're starting to pull closer and closer. As the U.S. annoys everybody in the world, the other countries are looking for other alliances, other ways of connecting and gaining power that they can't have when the U.S. is just totally in charge of everything. And so you're seeing China and Russia and Germany start to look for ways to cooperate. See, we feel like in the U.S. that we're clearly the good guys, and everybody should see the difference between us and Russia and China. But to the rest of the world, the difference isn't quite as clear, because they see us abusing our power and, yes, spying on everybody in sight and invading anybody who gets in our way and using economic warfare against countries who cross us. The whole oil price collapse thing and the sanctions over the Crimea are really economic warfare aimed at Russia. That they have really felt the pain of crossing us, because we do have the power to affect the financial stability of just about anybody else. But that also gives them an incentive to make it harder for us to get away with that next time around. And so, we're seeing these guys take steps to use their own currencies in foreign trade and to set up parallel payment structures and development banks and other kinds of institutions that allow them to bypass the dollar and minimize the power of the U.S. So this is the kind of thing that happens piecemeal and seems very small, but hits a critical mass at some point, where all of a sudden it's very noticeable and changes the world's perception of the U.S. as the sole superpower and as the dollar as the world's only reserve currency. That's coming, and it'll come slowly at first and then very quickly, like the old Hemingway quote about somebody going broke. Slowly at first and then all at once, and that's the way it'll go for the U.S. as the world's dominant power. We'll stay the world's dominant power until one day we're just not anymore. And we're seeing the early stages of that process now, and it's going to be very unpleasant when it happens for us, because so much of our economic well-being now depends on the rest of the world being able or willing to take unlimited amounts of dollars, which we're creating in order to cover our debts. You take that ability away, and then all hell breaks loose here. We all of a sudden have to live within our means, which means we've got to cut something like $6 trillion in reality out of the annual budget of the government.
Well, the U.S. has already borrowed a lot of money from China.
Sure. Yeah. Oh, yeah. Lots of people in the world, besides, including China, but also Japan, Saudi Arabia, and even Russia, owned a lot of dollar-denominated debt. And were they to decide to dump that debt, which they're not yet, but were they decide to do that because they feel like their own currencies are now sufficiently stable to be in their reserves and sufficiently liquid to be used for trade, then it's over for us, and that's not really on the horizon, but the conditions are being created in which some kind of a crisis, when that becomes conceivable, is out there and probably going to happen in the not too distant future.
We'll have more with John Rubino right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to John Rubino. His website is dollarcollapse.com. John, you were saying the U.S. dollar, of course, is skyrocketing right now across the planet. Other currencies look like they're just trash in comparison. I mean, the little old Canadian buck just keeps losing pennies a day, it seems. What's going to happen when the U.S. dollar peaks?
Well, right now, a strong dollar is really the reason for the economic underperformance that we talked about at the beginning of our conversation today. Having your currency go up by 25 or 30% in 1 year means that anything you're selling to the rest of the world just got increased in price by that amount. You price your stuff in dollars, and if the dollar goes up by 30%, then whatever you're selling is also up by 30%, which means the stuff being sold by other countries is down by 30%. So we're seeing a dramatic difference in the terms of trade here compared to a year ago. And that's hurting corporate profits in the U.S. Our corporations can't sell as much to the rest of the world because their stuff is way more expensive all of a sudden. And so as a inevitable result of that, the dollar is causing U.S. economic growth to slow dramatically. So this is functionally the same thing as higher interest rates. It's like our interest rates got bumped up by a third in the last year. Money got much more expensive. And so there's a question about how far this can go. How much further up can the dollar go before we dip into recession? At which point we have to look at the strong dollar and realize that it's a huge problem, and then take steps to deal with it by cutting our interest rates even further and printing a lot more money and just generally trying to devalue the dollar. So then the terms of the currency war shift. And it's not clear where that point is, but based on the most recent set of statistics coming out of the U.S. government, I would say that we're here now because the deceleration in U.S. growth is really dramatic. And let it go on for a couple of more months, and we are in recession, which we can't handle. No hugely over-indebted country can handle a recession anymore because, first of all, it makes your debts much harder to handle and leads to a lot of defaults and bankruptcies, which have the danger now of spiraling out of control, knocking us back down into at least a 2008, 2009 kind of crisis, and maybe something reminiscent of the 1930s. That's what would happen if a country like ours with this much debt had a serious recession now. So that's one thing. And the other thing is that corporate profits would plunge in that kind of a scenario, which would knock the stock market way down, which would kick the last pillar of U.S. growth, which is the wealth effect, out from under us. Because when equity prices are going up, we tend to feel richer, and that leads us to spend more money, which helps support the economy. So when equity prices turn around and go back down, we feel less rich and stupid for being in equities in the first place, and we tend not to buy new cars and take big vacations and buy big houses and things like that. So the economy slows down even further. So you get a lot of self-reinforcing processes at work in an over-indebted society when economic growth flatlines. And that's our big risk. So let that start to happen, and we have no choice but to aggressively devalue the dollar. So you'll see Fed policy turn on a dime. I mean, if they're thinking about raising interest rates today, a year from now, if the current trends continue, they'll be talking about cutting interest rates aggressively and buying back, all the debt that the U.S. government is creating and doing massive infrastructure spending programs with borrowed money, and the whole inflationary scenario will return with a vengeance. And so in that kind of an environment, then presumably they'll use a lot of the money that they're creating to prop up asset prices. So by buying back bonds, they increase bond prices, push down yields. And by buying back stocks, which they have been doing and they will not hesitate to do again, that'll make the stock market in general go up and hopefully maintain the wealth effect. So you'll see an inflationary surge again in the U.S. And one thing that's good for is gold. Because if you look at a chart, which was just published by Gold Core the other day, that shows the price of gold in the various currencies of the world over the last 15 years, you see that gold had a really nice bull market in every currency up till 2013, and then had a correction, a completely understandable correction, because you never see anything go in the same direction forever. You have a nice run and then a correction and then a nice run again in a bull market. And so after that big correction in 2013, gold resumed its increase in every single currency except the dollar. And so we in the U.S. see gold as in this nasty bear market, but everybody else in the world sees gold as having corrected and then resumed its bull market. So what will happen in the U.S., if we join the currency war and decide to push the dollar back down, then gold will probably start going up in dollars again, and the bull market will resume here. So that I think would be a really interesting side effect of all this crazy stuff when the Fed has to reverse course and go back to QE, is you'll see the traditional inflation hedges, traditional hedges against bad government, like gold and probably silver, turn back around, and then we'll stop thinking that it's in a bear market in the U.S. and we'll realize that the bull market was just delayed for a couple of years by the super strong currency here, and now it's back. So, I'm not really looking forward to a lot of this stuff because so much of it is dark and dangerous and leads to huge risks. But I think owning gold is one way to mitigate some of those risks, because that's the one thing that's going to benefit from all this, almost without doubt. That is the one place everybody hides when they're worried about their government screwing up. And so as more and more governments are perceived to be screwing up, you got the civil unrest in Germany must be terrifying for Germans, because they have a cultural history that has seen this before. They know what it can lead to. And so their tendency to hide out in safe haven assets is probably greater than that of Americans. We've never really seen a crisis on the scale that Europeans have just kind of taken for granted in the last 100 years. They've seen horrible stuff happen over and over again. And so they understand that governments can mess up on a biblical scale and just totally destroy their currencies and along with everything else. And so it's not a surprise that Europeans have been buying gold lately. And so we'll see that mindset return in the U.S., I think, as it turns out that this recovery of the last few years was mostly false, and it was mostly based on borrowed money. And now we're going back to the same well again. As we slow down, even after all these years of zero interest rates and massive government deficit spending and huge amounts of currency creation, it didn't work. We're dipping back into recession, and now we're going to have to go back to the same policies of inflating everything in sight, but with even bigger numbers. And we have no choice. We don't have any other policy options but that. I think that's going to spook people. And it's going to send a lot of money flowing out of dollars and into assets that are perceived to be more sound than dollars. And so whether it's this year or next year or 2 years from now, you can't know about the timing for these things, but it does feel like it's getting close because as the U.S. gets closer to recession, the realization has to dawn on us that we can't handle a recession. So at that point, you're going to see the Fed reverse course, and then everything changes. This whole, we're in a recovery and the dollar is strong, that kind of mindset will shift to its mirror opposite. And then I think gold benefits dramatically from that.
John, thanks a lot for chatting with us.
Sure, Jim. Anytime.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Check out our YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.